Buenos días y bienvenidos a todos los comentarios diarios del mercado para el martes 5 de mayo. Okay, that's about as much Spanish as I'm going to go with for today. Hope everybody's having a great day. It is Cinco de Mayo, 5th of May. Beautiful day. Welcome to our lovely daily market commentary. We are ready to kick it old school, as we always do, looking at our same 10 to 12 futures markets from an educational perspective, looking for both breakouts and reversal trades. Hopefully today you are able to enjoy some time in front of the markets, spending some time with some family, and then maybe make a little coin on the way. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, and all that fun jazz as it happens. All right, let's go ahead and dive in. The S&P is up 32 points this morning. So yesterday when we were looking at this, we had the gap down, and Sunday night we looked at the gap and go as a potential, and it immediately told us, hey, no, this isn't a gap and go play, because we got above the first candle's high. So one of the things when we look at our gap and go plays, I want to see that it has a continued movement after the first candle, and in this case it just poked below and then popped right above. Now, what it did do, though, was we said, okay, well, there's supply up here, and this is the supply level we spoke about yesterday. Now, why was this a confirmation entry on supply? Well, the reason that this was a confirmation entry on supply was really twofold. One, we came close to touching it yesterday and didn't get in. And two, we're still in a big picture uptrend. Why do I say that we're still in a big picture uptrend? Remember how trends are defined. Trends are defined based on swing highs and swing lows. So if I'm looking simply at swing highs and swing lows, if I look for my last two swing highs, my last two swing lows, we have yet to put in a lower swing high. So that is the real key to consider. So when I determine trend, and here's a screenshot, it's kind of a snip of what we're looking at. When I look at my last two swing lows and swing highs, what I do is I begin at current price, and our current price obviously is this area right here. Well, now what I need to do is look at my last two swing lows. Well, here is a swing low, and here is a swing low. I definitely have lower swing lows. I also, however, need to look at my last two swing highs. Well, this is my last swing high followed by this. So yesterday when we were looking at the market on our 4-hour chart, we were right down here. So by getting below this area, we had put in a new swing low. However, we had yet to put in a new swing high. Does that mean that we're not going to put in a swing high? No, that's not the case at all. Matter of fact, the rally that we have right now sets up for a potential pretty nice reversal for price to move that next leg down. Right? It sets up a nice reversal for price to possibly move that next leg down. But remember our rule on being short the market. I cannot be short the market until the market tells me to do so. Essentially, I can do it. I just need confirmation to get short. So what that means is that yes, I'll miss out oftentimes on pullbacks when we are in an uptrend, and I'll miss out maybe on this move. However, let's just say theoretically that we get an official lower swing high. What that'll do is it'll allow me to participate in the next impulse and corrective move as they begin to come back down. And that's really what I'm looking for, is if that happens. Now, until it does, I'm a buyer, right? Until it does, I'm using limit orders to enter on the long side and confirmation orders to enter on the short, right? Meaning I'm willing to buy on good pullbacks to demand as soon as it touches demand, but you've got to prove it to me that the supply level is going to work before I'll be willing to go short. Okay, so hopefully that makes sense to everybody. So now what I need to do is look for potential areas of demand where I'm willing to be a buyer. And so interestingly enough, in the overnight, this was our supply area. Notice this was a confirmation supply. We popped through the top of it. So when you pop through the top of a confirmation supply, that supply is no longer valid, and it never gave us an entry, right? So there's no reason to take a loss on that position. Now, in the overnights, the market has come back to that area, and we got a little bit of a reversal, and we are rallying up off of that zone. If you missed that position because you were not in front of the markets, now for those of you that are in the European markets, that was right around the London Open. You were able to participate in that position. I think you've got a potential for a breakout above here, and as it may come into this next gap fill area. Okay, so that gap fill area would be kind of a potential area. Once again, it needs to be a confirmation. Other than that, I don't have any super quality demand for me to say, okay, let's look for a reversal trade, because we've already hit it. And if I go lower than that, then by definition, if you think about it, yes, this is a quality area of demand right down here. However, if we come to there and we pull back down to that region, then by definition, I will have a lower swing low and a lower swing high, and my trend will have changed. So this is what I call an inflection point, as a point where trend may begin to change direction, but I'm still a buyer on a breakout if that breakout shows up. Okay, so let's look at that same picture in the Nasdaq. So in the NQ, we get much of the same with the bullishness that we talked about in the S&P, but the NQ did pop above this area here that we looked at as a potential area where we could see some resistance at the gap fill level. Popped right above and got a bit of a pullback yesterday in the middle of the day, and then we've since rallied up. Now, the interesting thing that I see about the NQ is that in looking at just from the high to the low, right? I'm looking just at the high to the low. We're going to measure that retracement. And when I measure the retracement from the high to the low, what do I see about the NQ? Well, the NQ from that high, from the most recent high to the most recent low on the hourly chart, has surpassed this 50% retracement, and it's hit the 61.8 and pulled back a bit. Now, when I compare that to the S&P and its retracement over the same period, what we'll notice, and you don't have to be a Fibonacci wizard to be able to spot this. What we'll notice is that we on this one retraced at the 50% mark and have not yet made it to the 61.8. So what we do that for is because that tells us that the NQ was a significantly stronger market yesterday than the S&P. So the NQ is up 100 points in the pre-market, up 1.15%. The ES is up 30 points, up 1.04. But really, the story was yesterday and the strength that the Nasdaq had on its rally back up. Now, as we continue to rally up, the only level that I would look at up here to be concerned with is this up here for potential supply. This is a little bit of basing before a pretty nice drop, where we could see a potential reversal. Now, knowing that that has to be a confirmation entry somewhere up here, right? And we do have the potential for a breakout level above our overnight Globex high. Now, we do have a little bit of supply up above that Globex high, which also corresponds with that 61.8 retracement. And so I'd be a little bit concerned about a bull trap area up here. So if you do get into that, take the entry on the 15-minute chart, but quickly move your stop to adjust for that potential bull trap that I think does exist. All right, if you take that breakout, look at the breakout on the 15-minute chart and move your stop very quickly to adjust for that potential bull trap. All right, looking at crude oil. Now we're analyzing the September contract. That's the one that we've been using. We are rallying up, and we're sitting just below our potential breakout area to head back to the upside. We've seen a little bit of strength come in oil recently, and so if we get some basing, looks like we have a bit of basing here. You could get a little bit early if you want to get a bit more aggressive and get in right through here. On a pullback, we actually have a potential area right in here on a bit of a pullback if you want to try the long position, and then there's a wick over wick down in here. So there are some demand levels to consider. But when I go to the 4-hour chart, we did just, I need to get higher than here But if I do my, the same thing that we talked about earlier, my swing highs and swing lows, here's my last swing low, here's my last swing high. I've got slightly higher swing highs with those two and roughly the same swing lows. So, if we pop above here and we come down and we put in a higher swing low, we'll have put in a new upward trend. And then that gives us up until this region for price to run. All right, looking at gold. So gold yesterday, we did get a little hit off of our hourly level. But then 1, 2, 3, 4, 5, 6 candles later, we had gone basically nowhere, which tells us, okay, probably should get out of this thing for a small profit. And that's kind of what happened yesterday in our gold trade. And then at the London Open, we got this nice wick up and a wick down, followed by a wick up, which is oftentimes, in my experience, a stop sweep. I've seen that as a pretty standard stop sweep opportunity, and it wipes out a lot of the traders that were trading breakouts the wrong way, frankly. So while I think this is an important, this wick was important, I'm not gonna utilize it for my analysis of potential breakdown. So if you want to take a breakdown below this 1702, I think you're perfectly okay to do so with your stop somewhere up above this 1709 region. If that's too wide for you, then wait for a retest. You have an opportunity to see price come down here and then retest that area going forward. In our bonds and currency markets, the ZN, same thing I said yesterday. We're in a 4-hour sideways price action. This is tough sledding, and I'm not going to even analyze it until we get through some of these levels. Just doesn't make sense to do so. In the Aussie, so our 15-minute Aussie level yesterday, we got a nice little move off of that zone, moved down out of this level for about a 2-to-1 opportunity. We got a second bite at the apple. Notice we traded a bit deeper into it, and we didn't get as big of a retracement. So that's an opportunity then for a potential breakout to the upside, and that's what we saw happen later in the day. But this was really the trade, was the short off of this level. So hopefully you're able to catch that and make a little bit of coin off of that position. And now as we see the price is starting to rally back up, are we getting a rollover here, right? That's what I've got to question. On a 4-hour chart, we put in a lower swing low. Are we getting a rollover where we now will have a lower swing low and a lower swing high? This is kind of like what we spoke about in the S&P. It's that inflection point that we're sitting at, which is determining where we are in a bigger picture trend. Right now, on the daily, this has just been a couple of day pullback, and this is a reversal candlestick where we could see price move a bit higher. And I think my when I look at this, my gut says, okay, I think we've got one more thrust higher in this position to get us back to these highs. We are seeing momentum slow down. If I look at my momentum indicator, we are seeing a slight slowing of momentum in these positions on the daily chart, and so I got to keep that in mind as well. So looking at where I think we can go for today, let me get rid of all these moving averages. Looking at kind of what I'm thinking for today, if we get this is an interesting spot here, because on an hourly chart, if we roll over from here and get lower than this low, then I think we've got room for price to continue to fall. So let's look at this as a potential breakdown area if we get the basing inside of this region. Other than that, I don't see super quality areas of demand. We got a little demand area down in here that could be a bit of a stall. But if we roll over and we break below here, we'll have a confirmed lower swing high. So we would have a downward trend that starts, so that demand level may not hold, as the impulsive move may drive it lower. In the euro, so our euro level yesterday, our breakdown in the euro worked excellent for those of you that grabbed the euro breakdown. And then our 15-minute demand area, we got a little 2-to-1 move off of that zone. So both the breakdown and the reversal yesterday were pretty effective in the euro. We then, in the overnight at the European market open, got a big pop up into the origin of the breakout. So you got an opportunity at the European market open, and it's continuing to sell off. So in that continuous sell-off, as we are still moving down, I'm going to look at the 15-minute chart and see if this becomes something that's worth reviewing if price comes back into that region here in the next little bit. Keep an eye on that one for today as a possible area. We could also just get a breakdown below the lows, and price could still certainly fall a bit farther. Canadian dollar. So our Canadian dollar on our hourly chart, we rallied up into that in the overnight. We got a nice little move away, about a 3-to-1 move away on this one. Came to the opposing demand area and now is rallying back up. I'm not going to try this level again because we've already hit it once and traded to the top of that zone. So what I would actually look for now is a breakout above this region if we get some basing. This could become a reversal candle, as a spinning top right now. And if it does, then you want to try the short, go candle to candle. When I look at the 4-hour, my 4-hour trend, I'm still in a kind of a sideways price action, right? I mean, there's not a clearly defined 4-hour trend direction that I'm going to really want to lean on. And so I'm okay if we get some basing in here to take the long. All right. Last but not least, Great British Pound and Japanese Yen as we take a look at kind of what happens in those particular markets. So our Great British Pound position yesterday, that one, unfortunately, we hit our 15-minute supply area that we had talked about in the DMC and just popped right through that area. Or, even if you didn't get stopped out because your stop has to be above this wick, 6 candles later, price had gone nowhere, so it told you, okay, this is not moving. And so we want to get out of Dodge in that instance. So looking at the 4-hour, we're very much in a sideways price action. I can look at this line right here as a potential breakdown point. On the 4-hour chart, it's pretty clean, but we're still far away from it in this particular time period. So there's really nothing else for me to add. We did have this little supply area up here. Came very close to getting filled, and that should have been green anyway, or pink, because it's a 15-minute chart. Came very close to getting filled, and unfortunately did not, as it just came to near that gap area, and so I'm still going to leave that area in play as a potential level. And then our Japanese yen, we're still in between our areas of supply and demand, the levels I've been talking about for a couple of days. So really nothing for me to add on this one. So I know we went a little bit long today. I built a lesson inside of there. So hope you appreciated that. And if you guys have any questions, please send us an email, support@tradersarmy.com. You guys are the best. Thanks for joining us. I'll talk to you soon. See ya.